Very good morning to you. I'm Malcolm Graham-Wood, and it's a joy to be back at Core Finance TV for my CE interview. And it's an absolute joy again to welcome back Fiona MacAulay from Echo Energy.
Thank you, Malcy. Good to be here.
Yeah, great to see you, Fiona. And there's been so much going on.
Yeah, you've been quite busy.
Yeah, I mean, it's hard to know where to start because there's been so much going on that in all the different areas. So why don't you just give us an overview of what's been happening, and then we'll tuck into some of the more detailed things afterwards. Yeah.
Okay. Yeah, that's absolutely fine, Malcy. I think where we stand today is that we really have turned ourselves into a full cycle exploration-led E&P company focused primarily in the Santa Cruz province of Argentina at the moment. And we've really been trying to build our core nav through the drill bit. So we've had a very active 6-7 months since we completed the acquisition of this parcel, 2 parcels of acreage down in the province, in which through a series of workovers and exploration activity we've been seeing great success with a new play concept within that region.
And Argentina, you obviously people asked you when you first went in there. It was a little uncertain, but you've been happy with the
Yes,
situation?
I mean, obviously Argentina's had a little bit of a wobble during the last 6 months. I think what's really interesting is the way in which they've dealt with it. So we saw the large amount of pressure, certainly portrayed through the interest rates and through the devaluation of the peso. But what was very clear was the wish of the IMF to actually bolster Argentina, and in particular President Macri. I think they're very pleased with the way in which he's been trying to regenerate the economy there, and for them to step in with those $50 billion of loans in excess of the $30 billion that they'd asked for was really very helpful, and in such a short space of time. So yes, there has been a little bit of a wobble. That's not necessarily been a bad thing for us at all, but clearly it's always a risk for people and a worry for people. But I think we've seen a good stabilisation through that process.
Right, you've completed a very successful workover campaign and an exploration programme as well, none of which was particularly low risk. I know workovers can be, but even last night someone was saying, I'm not sure about workovers because there's no certainty. Why don't you talk us through the results of the workovers and then the exploration, and then after that we'll go on to the testing programme and seeing how that's looking.
Yeah. Okay, perfect. So we commenced our operations with a 3-well workover plan. That was based in Fraction D, which is the smallest portion of the licences that we hold. It covers about 250 square kilometres, and within that is an old oil field that's produced about 9 million barrels of oil to date. We had a 3-well workover plan, which was one to test what we believe to be the gas cap on the eastern flank of that field, in which there are 2 independent gas sands. And the workover was to perforate a well that had been previously drilled to continue the delineation of the oil field. That had intersected one of the sands within the region, and that is mapped out in our competent persons report to hold about 15 BCF of gas. That was the CSO 85 workover. We perforated that. We flowed it on an extended well test for about 3 weeks. And the results of that were that, yes, that sand is going to be capable of producing commercially, given the right connection. And that immediately, for an investment of around about $400,000, has added 15 BCF of what will be converted into reserves. What we also discovered in the process was that we had an additional 12 BCF of gas that was attributed to the deeper sand, which was held as a prospective resource, but we have discovered that there was a well that was already producing from it, so that equally can be converted. So we're already talking about, in excess of 25 BCF on that eastern flank. We did a workover of a couple of the other wells in the central part of the field, And what we discovered was that as this field's been in production since 1985 through to about 2012, there's just a couple of wells currently producing. Actually, that fluid redistribution had meant that had now gone into a mixed fluid, oil and water, and we were able to actually bring in a certain amount of oil production from that well. So that's kicked us off on another part of the project, which is to identify which wells within the central part of that field we could actually quite cheaply recomplete and bring back into production. These aren't going to be massive producers. You know, they could be anything from 20 to 50 to 100 barrels per day. But you add those together and you swiftly
Given
come
that
to...
it was the low risk part of the starting process.
Exactly. And I think what we really found was, having sort of established that this eastern flank was going to be a nice gas producer for us, we were very keen to examine the deeper potential of this underlying reservoir, the Tabifra, which we'll talk about for the other exploration wells over to the west. And in fact, during the course of our exploration programme, we've diverted one of those wells to actually drill into the Tabifra to establish whether or not we've got this other extensive gas reservoir that could be incorporated into
How have your
development.
partners taken this? Because they must have been sort of keen to go on, and they've got an exciting new, lively team from London coming to do this, and then all of a sudden they're going, hang on a sec, they're asking us to change the fourth well in the programme, and that.
Well, I think the rationales that were used, which were that actually we'd already established further to the north in Fraction D that we'd de-risk the whole of that prospectivity. I think they were aligned with us that yes, if we could establish a greater volume of gas that we can put into a connecting pipeline, then clearly why wouldn't you want to bring forward production? And why wouldn't you want to convert something to a reserve base? So I think we've really been building this great now with their team.
So the workovers were successful. What about the exploration wells?
So exploration wells, we've now drilled and completed 4 exploration wells. When I say completed, we've not completed the testing portion, but we've run liners in each of those wells. What can I say? Certainly from the log data that we have and the data that we've acquired whilst drilling, we've been really happy with the results of those wells. I think I've explained to you, Malcy, that there are some certain constraints on language we can use in regard to the well, and we're very careful to.
I think that people
to
do understand that you've got delicate relationships down there, and this is an early part of your relationship with them all. So you're not going to jump the gun. So exploration has been moderately successful. Might turn out to be better, and the testing program is imminent.
Exactly. Certainly in regard to what we've seen in the wells on our wireline and mudlog data, we've been at the upper end of expectations, certainly in 3 of the wells. One of the wells, we've got a smaller interval of oil pay, but we look as if we've certainly encountered hydrocarbons in all 4 of those wells. Clearly, the proof is in the pudding, and we need to test those wells, and that's the key part, and that's the phase that we're moving into right now. So the rig is en route to the first location, to Estancia La Maggie. I'm hopeful it might arrive today, tomorrow. It's a fairly tortuous route to get there from the location it was on previously. But as soon as that's in place, we'll be kicking off the first well in the testing program.
It won't take long to mobilise, but how long will the whole process take with the testing?
So I would say, we're looking at about 2 weeks for the initial phase of testing. We may then bring on a separate testing unit to just continue with an extended flow test, but actually to go in, to perforate, to do the mechanical part of the testing program, a couple of weeks per well. So we've got a pretty hectic summer on our hands, and we're just tying down the final parts of those details. And what's great actually is, I was saying, the relationship with our partner. Actually, we've got part of their team in our office in London with us for the next couple of weeks. So I'm really happy with the way that is going.
Good. And is it true to say you're actually selling some oil at the moment.
Yeah, absolutely. So as part of the acquisition, our 50% working interest over the license areas gave us access to about 1,000 BOE, barrels of oil equivalent, per day. The oil goes straight into an oil storage terminal just a few tens of kilometres away from the field area. It's stored there until there is sufficient for a complete cargo. That's in addition to CGC's production from their other fields. So we had one cargo which went out to Vitol in April. I believe we're just about to load another cargo. That's it's really encouraging, and of course we can go straight into the export market, which is very, very beneficial. The gas sales go into the main transmission pipeline, and we sell that to a variety of customers through the domestic power generation and industrial chains. So
I think it's interesting here because we talk about oil and gas and everything else, and to begin, and I've called sort of quite a lot of hydrocarbons because in some cases I was expecting pretty much this whole campaign to be a gas campaign, but now it's changed a bit, or has it changed? Were you always expecting in the Tabifera or anywhere else to have so much success on oil, or?
Yeah, well, we very much targeted the exploration campaign to target 4 different play types within the block. So we could have just drilled 4 exploration wells on a single play type, which would have been, by far the least risky of the objectives. But we were very keen to test. We've got a gas fairway and we have an oil fairway. Then we move back into another gas fairway. So we were very keen to test those different models. Yes, we were anticipating that we may be within the oil window for part of this. Clearly, we need to test the wells as we've discussed, but we look like we've got a sort of fairly light oil would be the interpretation that we see at the moment. And of course, just 11 kilometres away, we do have production, oil production out of the Tabifera, but from a very much thinner section.
That's good. I want to come back to the technicals again in a minute, but I asked you last time you were here that you were building a team, and it's great to see that you've continued to do that, because in addition to the team that you talked about then, since then you've added 1 or 2 heavyweight, high-quality people to the team. I'm sat opposite one of them at the at your presentation. Tell us what your new faces are like and who.
Yes, so we have tried to bolster that team at both levels, actually. So the exec team has been really strengthened by the addition of Jeff Probert. Jeff has joined us as Chief Operating Officer. He has an excellent background in onshore production facilities. He was with Petroceltic for a number of years in Egypt and with BHP in Algeria. And, he really knows the business, and he knows this end of the business, the onshore framework. He's also very, very strong on the HSE side. So it's been great to develop that skill set, and also to allow me to step back and stop meddling quite as much as I might want to do. Julian obviously remains with us as our EVP of Exploration, and we all love our Doctor of the Rocks, and he and the team have been doing a fantastic job in trying to analyse the data as it comes in. And, relatively hot off the press, our new Chief Financial Officer will be joining us on the 1st of August. Martin Hull is coming to us from Rothschilds, which is where he's been for the last 20 plus years. Very integral to their oil and gas team, and I'm really, really looking forward to welcoming him in, and the different skill set that he's going to bring into the group. So I think it's looking an A1 team at the moment.
Excellent. Now, operationally, I would have said that you're probably ahead of the game already, but you have recently signed up the new seismic for the autumn, and so I'd be interested in that. I know that it all happened with a raise because you had an opportunity to get seismic at sort of knockdown prices or pre-price rises going up and so on. So talk us through, first of all, why you did it and the raise if necessary, and then operationally what's the second half got in it? So
I mean the activity to date over the first half of the year has very much been focused on fraction C, D and L. We're fast and furious, as we like to say, and we've been really getting after it with the drill bit. Now the other part of the acreage that we hold in the Santa Cruz province is Tapiaiki, and this is really our frontier scale exploration. Maybe being challenged a little bit in CDNL, but you know, still with very great potential. This is an exploration block that's at the beginning of its 3-year to 4-year period. On that block, we carry a work commitment of 1,200 kilometres of seismic plus 4 exploration wells. And, you know, for us, we thought that we'd probably just attack about half of that seismic in the first instance. However, as you said, we went out to tender. We were incredibly pleased with the competitive nature of the tender, the number of companies that came in, and the competition for the work. So through that process, we did receive some very, very good bids. And in order to secure those, and indeed to save our shareholders a considerable amount of capex, probably about $7 million when we look at Tapiaiki for the entire programme that we will need to shoot by the end of that 3-year period, we decided to go ahead and raise a relatively small amount of capital right at the beginning of the exploration programme to enable us to actually sign up that contract. I mean, even since then, we've been negotiating and potentially even making those terms slightly better.
And that will start, what, third quarter, fourth quarter?
So in Tapiaiki, we're going to commence the programme with the 1,200 kilometres in Tapiaiki. That will commence in November. We're probably looking at around about 400 square kilometres per month. So you can see that will take us through Q1. And at that point, we'll move on to Fraction C, where we're planning 500 kilometres, and even on to D, where we've got another 230 square kilometres to shoot. So yes, we've got quite an extensive period of seismic acquisition. But of course, each cube can be processed immediately, and the objective of this is to really get after Tapiaiki and to be drill ready in 2019.
That's brilliant, because you've answered my next question already, because I was going to say all the successes are rather obscured Tapiaiki, because I always thought that, and which is still right, that's the upstream, the exciting portion of this, and which you're underway. Quick word about financing. You started off well financed anyway. You've done another, as you say, small raise. You brought in 1-2 institutions, I noticed. You're financed fine for the time being with everything so far?
Yeah, so everything that we have planned and we've got mapped out, we are financed for. I think, you know, it is interesting, as you say, that we do have some production, so we're getting some free cash flow, so that's important, and maybe that can be driven into funding some of the workover plans that we have in Fraction D. Clearly, with successful testing, we'll be getting some of these wells on stream immediately, pretty much, give or take a few weeks of just connecting pipelines in. So, you know, I'd hope that we can start utilising some of that cash towards.
And you haven't got debt, so
well, we have a small have a small amount of debt and
warrants.
We do have warrants, and you know, actually, the warrants were a bit scary for me when I joined Echo, but I actually do see those now as something that we should be very pleased about. You know, if I think about how those warrants look for me, they have a high value. They're worth about $34 million pounds. Sorry, nearly $50 million to the company should those warrants be cashed in. So for a company of our size, actually, they're quite a valuable asset to be holding on to. And I think we've seen now, we've crashed through that price barrier of the 15.2p where the warrants were sitting, and hopefully they're not suppressing us too much as we continue, because I know that is a worry for
people.
For some
people obviously said. So the shareholding in the company, you've got your cornerstone shareholder, you've got the retail, and you've added on some institutions in the recent raise, so you consider that to be a sort of quite a good mix of people, really.
I do, and I think you know, the institutions should be welcome for the stability. We love our retail shareholders, and you know, as we've always said,
you go visit them quite a lot. You've been going around the country.
We did a regional visit. We've been as far as Dublin, so and of course we took some of our shareholders down to Santa Cruz. So it was a shame you couldn't join us on that trip, Malcy, but next time.
Next time, I hope. This sounds like a really ridiculous question, given your workload. But are you looking at anything else at the moment in terms of potential acquisitions and M&A?
Well, we are, and you wouldn't expect anything else from us. We've got a good amount of organic growth within the portfolio, probably much more than we had anticipated 6 months ago. So actually, what's quite nice about that is it does start setting the barriers a little bit higher. We've always been technically driven, as you know. An asset has to make absolute sense from a technical perspective. It also needs to make sense from a financial perspective. We wouldn't do anything that wasn't accretive to us as a company. I think that the biggest driver there really is just looking at, do we need any country diversification? But we won't be. We're not rushing into anything today. But it doesn't mean to say that we haven't got things in our line of sight. Yeah. But rest assured, those that pass those hurdles would be accretive to the company value.
So when you first announced this deal, it looked like a genuinely full cycle business, because you've got the production, you mentioned you've got appraisal, you've got workovers, and you've got a decent exploration program, and you've got some high risk. The Tapiaki is lots of fun for the high risk. Has that come out as roughly as you thought it would?
Well, I think if anything, it's come out a little bit better than we hoped. I think we're all. I'm not sure we realised quite how much work we'd taken on and how much we'd be cycling through the operations as we have been. But that's been great. And what's been fantastic is the team has really pulled itself together, and we're a very cohesive unit now. Everybody is having to play a big role within that team.
Brilliant. Time's running out, I'm afraid, as it goes so quickly. But obviously, at the end, I'll always ask you to, having said everything that you've said to us today, explain your vision, where you'd like to see Echo in 12 months' time, with all the things you've talked about. Yeah,
I think we've always said that we're striving to be a mid-cap company within 3 to 5 years. I've been at the helm now for 1 year. I think we've made really good progress towards that. And I would hope that by this time next year we're looking at something that's valued at over a couple of $100 million. I mean, that would be my objective.
Sounds very good indeed. Fiona, thank you very much for coming in.
Thank you, Malcy.
It's been a great pleasure today to welcome Fiona MacAulay, who is CEO of Echo Energy. I've been Malcolm Grahamwood on the CEO interview for Core Finance TV. Thanks very much for watching.